Hi, this is Dave Foster with the 1031 Investor. We're going to dive a little bit deeper into the nuts and bolts of what the 1031 exchange really entails and take a look at a couple of the more problematic requirements that must be met in order for you to have a successful exchange. Our last video mentioned the 45-day and the 180-day period. These are very condensed time periods, and there is no give with the IRS on them. You have 45 days from the sale of your old property, the closing of the sale, to identify your potential replacement properties. And here's the deal. Once day 45 passes, you can no longer alter your list in any ways. You are stuck with what's on that list. It can't be changed. So it's imperative that you be focused on trying to be as far down the road during that 45-day period as possible so that you don't run the risk of losing a property because you didn't have it under contract or weren't able to close the sale after the 45-day period is over. But wait, because it's from the IRS, it's the gift that always has some strings attached. It's not just that you can name all the properties you want. There are restrictions on how many you can identify. If you only identify 3 or fewer properties on your list, then it doesn't matter what they're worth. So you could sell a property for $300,000 and put 3 $5 million properties on your 45-day list. That's perfectly fine. So for those people that are looking to buy a property larger than what they sold, that can be a great opportunity. Many people find that they're going to want to sell their property and purchase several smaller properties. So in that case, they need to identify more than 3. And that's fine, but here's the catch. If you want to name more than 3 potential replacement properties, their total value cannot be more than 200% of the value of what you sold. So again, using our example, if you sold for $300,000 and wanted to name 4 or 5 potential replacement properties, their total value could not exceed $600,000 because 200% of what you sold, $300,000, is $600,000. So you can identify 3 properties. It doesn't matter what it's worth, what they're worth. You can identify 4 or more, and as long as their aggregate value is less than 200% of what you sold, that's fine as well. But what if you name more than 3 properties, and what if you have to break the 200% rule? Well, there's one more little exception, and that is that if you purchase, actually take title to 95% of your entire identification list, you can still have a valid exchange. 3 properties, 4 properties, 95%? Are you confused yet? Check out our other videos on this topic at the 1031investor.com.